Good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, where we take a quick time out early in the Middle East day to review where the markets have opened in Asia, where they may travel through the day into Europe. Let's kick off in Asia, in Singapore, with Kevin Wright, lead analyst of APAC for Kpler. Kevin, welcome back to the table. Markets seem to be back in their flatline state of mind after some jitters last week. How are you seeing the market today?
Excuse me. Good morning, Sean. Good morning, everyone. Yes, I think the 10% drop that we've seen over the last couple of weeks, the last 10 or so trading days, have been a bit of a sobering reality for people as we accept that demand is simply not recovering. And I think it's unlikely that we're going to see a huge amount of movement this week ahead of the meeting on Thursday. So I think everyone's in a sort of holding pattern, waiting to see what comes. I mean, I don't think anyone really expects further cuts, but for the sake of 2 days, I think the markets are going to be really quite patient and just watching what comes from that meeting.
I mean, from the point of view of where demand weakness has. It's hardly something that has suddenly arrived, is it? Or is the expectation was off and now has kind of sobered up a bit? How do you see that?
I think it's expectation. I think by now there was I think if we go back 3 or 4 months, if we were talking about September, I think people expected that things would have started to normalize, that, there have been signs around a vaccine, all that kind of stuff. But at the same time, that perhaps we'd found other ways to control cases. And in actual fact, as the summer has progressed, the number of cases in a number of significant demand countries has gone up. And as a result, we're just not seeing that recovery that perhaps we'd expected by now. As I say, we're in September. And if we go back to June, I think people were talking about August and September being the sort of the light at the end of the tunnel, or at least a light somewhere along the tunnel. And it's just not happening.
Robin Mills, CEO of Kpler Energy. Robin, welcome back to the table. I suppose OPEC hit it on the head themselves yesterday with their monthly report, where they revised further down the demand forecast for 2020. Is that signaling that they're going to take action this week? Should they take action? How do you call it?
Well, Sean, I think you've heard skepticism from me and from some of the other guests you had on regularly, about this demand recovery. So no big surprise that the recovery is stalling, and that's OPEC has acknowledged that in this report. Obviously, this is this report informs the OPEC members. The monitoring committee is meant to assess the market this week, and then only then is there possible recommendation or discussion by the members if they should change the cuts. I personally think that they won't. I think the attention has been really on just improving compliance. We know the kind of long-running arguments over Iraqi compliance. We've now got a bit of a discussion over Uae compliance and whether they'll make that up in October. I think that's really more the attention. I think it's been hard.
On that point, Robin, the UAE compliance, since that UAE announcement a few weeks ago, it kind of seemed to spook the market. I don't know if it's coincidence that since then the market has been fragile and falling, or how do you see those two events aligned?
I think that was one factor. I think obviously just the weak demand outlook has been another part of it. But yeah, I think the UAE sign, because the UAE, of course, has always been a very good complier and has always been seen as very closely aligned with the Saudis. The fact that they were under complying in August and September has been worrying. I think there are technical factors behind that. So they needed associated gas for the summer demand peak. And that demand peaks are much higher because people aren't leaving the country as they normally would over summer. ADNOC itself has said that it'll make up compliance in October. If it doesn't, then there will be a concern about whether the discipline of some core members is crumbling. But I think likely they will try to make that up later in the year. As we get into the cooler weather.
Let's leapfrog over a few oceans and go to Florida. Randall Mohammed, VP Energy Solutions at Ahart Solutions International. Randall, welcome back to the table. If we all agree that demand is kind of off a cliff, or generally the king has no clothes, or whatever analogy you want to use, it seems to then turn all the attention back to supply. We kind of move in waves. It's a demand week. It's a supply week. It seems like we're back looking at supply and where it can be removed.
Good morning, Sean. Good morning, everyone. Well, look, it's been a couple of busy weeks here in the U.S. You know, we've got fires burning in California. We've got a hurricane in the Gulf of Mexico. We've got elections that are heating up, and we've got a pandemic. And look,
Sean, I don't know what you did in your last life, but obviously, America, the gods are screaming.
But Sean, you know, it really adds up to that lack of demand. You know, and one thing that has happened is that the NFL, the National Football League, has kicked off very recently. And today we've got empty stands, probably for the first time in God knows when. But again, you know, all this is impacting on demand. Of course, the elections have started to heat up, and it's a battle for what we call the swing states: Texas, Florida, Pennsylvania. We saw Trump last week in Florida, and surprisingly, he has extended the ban on drilling in Florida, as well as Georgia and South Carolina, whereas Biden in Pennsylvania has denounced, well, he has supported fracking, I should say. So that's a sort of a 180-degree turn for him.
Well, I mean, ultimately, one has to acknowledge that the fracking boom and, you know, revolution, call it what you will, all happened under the Obama-Biden 8 years, right? I mean, that's where the big moment. So you would have to say that the kind of general narrative that Democrats are against that space, I think, is a little bit of a misleading indicator. But Randall, just talk to me a little bit about where is America at in terms of the sort of media noise regarding the lack of a second stimulus package. Is that just being accepted now as a failure? It isn't going to happen?
Well, Sean, you know, last week, Steve Mnuchin and Nancy Pelosi met, and unfortunately, there was no agreement. What has happened is that the proposal put forward by Mnuchin, Pelosi termed it a skinny proposal. You know, he came in with a sort of a $650, $680 billion proposal. But this time it was really targeted at specific sectors. So in one of your articles, Sean, you mentioned the fallout in tourism, you know, the airline industry, the hotel industry, the food and beverage industry. And the strategy for the Republicans was to really zero in on those particular sectors and sort of get those sectors going again. But the way we look at it, it's very unlikely that we may get a bipartisan agreement before elections.
And yet, the stimulus that has come thus far, particularly from the Fed, seems to keep the equity markets, at least, from any serious correction. Kevin, out of Singapore, obviously this is the week we all should be in Singapore for APEC, but we're not, and we're kind of observing online and other ways. But the noise coming out of there also somewhat negative regarding the demand recovery and adding fuel to that narrative that this is not going to deliver.
Yeah, I mean, two of the protagonists, if you like it, two of the biggest trading companies in the world, Vitol and Trafigura, very senior figures there have come out with a very bearish scenario in their headline presentations this week. I think Ben Lockhart was talking about just demand not being there, and Russell Hardy also talking about the no recovery and the sort of 30-odd% drop versus where we expect it to be. So, yeah, that's very much the noise coming out of Singapore. It is.
And you also have the growing, and on the back of that, the contango opportunity.
Yeah, and actually, just before we came on air, I was having a quick look at some of the curves around the world, and the contango opportunity is growing. And as we know, VLCC freight has dropped significantly. I think there was a report last week of a BP fixture at just around $22,000 a day, which is way down on where it's been, and that is going to effectively facilitate, contango storage plays.
Well, that could also, as that contango play increases, I mean, you'll finally run out of tankers, and the rates may go. What do you make of the story we have in the digest today regarding the bailout that Australian government is looking to, not a bailout, but ultimately a financial support for the refineries in Australia? Is that an outlier, or will you think we'll see more of that?
I think this is a very interesting point, because there's been a debate within Australia for a number of years about energy security, and the fact that Australian inventories are generally way below what is recommended by international agencies around the world. So for them to come out at this time with that stimulus is not that surprising, but I'm surprised by the size of it. 2.3 billion, I think, which is not small, especially when you consider that you're talking about really 4 quite old refineries.
Yeah, and I said, but there is, I think, underlying a lot of things at the moment in Asia, perhaps with the China point we've talked a bit about, security of supply I think security of supply issues and security of essential assets, they start to percolate more as things get more tense geopolitically and the markets become problematic. Robin, going into the OPEC week this week, do you see harmony amongst this group, regardless of the choices they make? Is this a coalition going to hold Russia, Saudi, etc.?
Yeah, look, I think it will, but I mean, harmony, I don't know. There's never perfect harmony, right, in OPEC. I think there's a number of members who haven't complied, and we just talked a bit earlier about Iraq. They're improving their compliance. Well, the compliance is okay, but the question is whether they'll over-comply to make up for their past failings. The UAE probably will get back in line. Nigeria is always a problem. And then Russia, of course, has been somewhat under-complying, because it always does, but Russia's kind of too important to this to press too hard on. So I think
interesting about their statement yesterday, less interesting about this year, but the outlook for 21 was quite bearish.
Yeah, really, and that's where where attention is turning now. We've only got 3 months or so left in this year, but we're still, I guess, advancing on the kind of V-shaped paradigm that we had earlier this year. Is that actually going to be the case? And I think there's increasing pessimism that there'll be a swift bounce back in 2021. And there was the concern that about the vaccines. I think a mindset had formed that yes, there will be a vaccine by the end of the year, and then we're all back to normal. I think that's now fading as people realise that at least some of these vaccine trials are not going as quickly as people hoped. And that's normal for vaccines. People should really have anticipated that it would not be a magic solution. You've seen major vaccine companies saying that it could be 2024 until we've actually managed to vaccinate everybody. Perhaps even if that's a bit pessimistic, I think we can see that 2021 is going to continue to be a struggle. And then, of course, you've got the BP views that there's going to be a permanent shift to lower oil demand because of various factors, but in the short term, home working and disruptions to air travel and so on, things that don't easily go away.
The peak oil being already reached, or the BP adding to that narrative, certainly is piling on the sentiment. Do you think there's anything difficult for OPEC in terms of demand forecast? Sometimes when they meet, it's still kind of an uncertain outlook. Should we wait and see what happens? Do you think on the demand side, it's pretty clear that it isn't where it needs to be for the foreseeable future? And from the point of view, whether you adjust or not, but at least the demand pathway is clear for them?
I think the demand pathway for the rest of the year is fairly clear, and as we said, there's only a few months to go, but that it's going to be fairly weak and into early next year. Really, I think the divergence would come later next year if there is an effective vaccine, or if there's a substantial reduction in the virus and a lot more countries are able to get back to somewhat normal economic activity, and particularly on flying. or do we continue in the struggles that we are now through the whole of next year? I think so. That's when the uncertainty increases. I think is later into next year. The OPEC cuts, obviously, at some level of cuts, are supposed to endure up until about April 2022, in fact. And then, so obviously before then, they'll have to make a decision whether they continue them or taper them. But they've still got some pretty significant cuts under the current plan running all through 2021. And I think the market concern is, okay, they've done very well so far, but is fatigue going to set in during later this year and through next year?
Randall, is there any further support assistance? Do you think we got a hurricane coming in again this week into the Gulf of Mexico? We had a decline, although fairly small, in rig count last week. Is US going to offer any support to the oil price?
Well, I think, look, I think if prices continue to be soft and they don't firm up, I think we're going to see a few more bankruptcies. Rystad Energy has forecasted that if prices don't firm up beyond $50, we can see about 150 more companies file for bankruptcy. So I guess that's involuntary support for oil prices. Definitely, that's going to happen.
It does feel like we're coming into that window. We've talked about it before. The US stimulus is running out now. The UK stops next month, I believe, in terms of all of the unemployment subsidy and et cetera. And as those close down, inevitably, we'll see who has no clothes on as the tide goes out.
Yes. Well, the first rounds of stimulus expires at the end of September. And, the market was really looking forward to second rounds of stimulus, especially the airline industry, which, as you know, they've already indicated that they are going to lay off thousands if that stimulus does not come. So that's something we've got to keep our eyes on. And interestingly, is the Secretary of State's visit to Guyana next week. And that's interesting from a couple of perspectives, because there's been a lot of noise between the government and Exxon, one. And secondly, Guyana is neighbor to Venezuela. And, Venezuelan elections are also coming up in November, December. So,
and Randall, how is the story playing the Woodward book? Big news this week, particularly the statements by Trump that holding back information on the critical nature of the virus early in the year. Is that going to resonate, do you think, particularly in Florida?
Well, Sean, it's a battle between Trump and Biden, but it's also a battle between Fox News and CNN. And, it depends on which station you listen to. You get a different narrative. So definitely CNN is going to push the Trump and his naive outlook on the virus. But I think Trump's trump card, so to speak, is got to be the vaccine. And I think this is something that he has planned and something that he's banking on to pull himself out of this hole. It's got to be that vaccine.
Well, we have a news story in the UAE today. The UAE approves emergency use of COVID-19 vaccine. I haven't really dug into it very much, but I think these sort of headlines, these kind of all will be well, we're going to be saved kind of headlines are possibly they're coming, but I don't know if any of them will really deliver in any particular time frame. Let's bring up the survey question for this morning and get the view. Again, it's sort of tackling that OPEC point. What's going to happen? How should OPEC react this week ahead of Q4? After their statement yesterday, world oil demand will tumble 9.46 million barrels this year. OPEC said yesterday, more than the 9.06 million barrels per day decline they declared only a month ago. So another 500,000 barrels a day gone. How should OPEC react this week ahead of Q4? Option one, reverse the 2 million barrel per day production increase that was went ahead in August. Two, OPEC laggard should make up for oversupply over the last few months, and that makeup is meant to be happening in August and September. Or three, leave all as it is. So how should OPEC react this week? Not how will they react, they're probably not going to do anything, but how should they react is really the sort of opinion of the room that we're trying to get a hold of. And that's where we would like to get. So let's take the vote on that and kind of go back to Kevin and take some sort of closing views of where we think the market will travel over the rest of the week. And beyond the OPEC point, Kevin, is there anything else to watch? Where are products moving, tankers, and so on?
Yeah, certainly on the crude side, we're still seeing very significant levels of floating storage around the world. There's a lot of crude on the water, and that's really not helping prices. I think, as I said at the top of the show, everyone's looking at what OPEC does on Thursday or doesn't do on Thursday for the next price direction, and it really comes a lot.
Is there anything in China that we should be watching, Kevin? I mean, obviously, we've been all obsessed with the increasing sort of traffic jam of VLCCs at the ports in China. Anything to note there?
Yeah, I mean, according to our Kpler data, 82 million barrels of crude still in floating storage just in Chinese waters, and Chinese inventories onshore are at 895 million barrels. So we just keep seeing this number go up and up and up. And as
so
we
895
know,
plus 100, you're basically at 1 billion barrels.
Pretty much, yeah. And that's going to take, well, I mean, I see predictions of how long the normal drawdown rate will take to actually get that to within normal ranges. And it's probably sometime in 2022, if it sort of, even if they sort of trim the purchasing rate that we've seen over the last few months.
And Randall, in the US, where are you looking for the rest of the week? We expect any drawdowns of inventories in the US?
Well, we've got. I don't expect any major drawdowns because the demand is still very fragile. You've got that hurricane. I don't expect much product shut-ins from that hurricane. We've just gotten over Laura, and we are now seeing LNG shipments back on stream, which is good.
Exports or imports?
No, exports.
Exports, yeah.
Of LNG out of the Gulf of Mexico.
Out of the US.
Correct. But that impact of Laura was so minuscule in terms of the price movement of WTI, which tells me that there is still a lot of inventory and a lot of storage coming out of the US as well. If that hurricane that had impacted last year, you would have seen a more significant uptick in that price. So look, there's a lot of inventory in there. There's a lot of oil still in storage. But as I said before, it's a demand side problem, and we need a demand side solution.
Do you think there's any indication or appetite in the US or in Florida or any particular state of scale, Texas, to have a further lockdown, given the challenge of COVID still?
Well, look, I mean, I don't think we'll see a full-scale lockdown, but the narrative now is that, abide by the rules set by the CDC, wear your mask, exercise social distancing, and a lot of the restaurants are going to reopen, but with limited capacity. I think the mayor of Miami-Dade said it best. He says we got to get the economy reopened, but we got to be smart about it.
Yeah, it's kind of lockdown light. It's not a lockdown, but everybody's behavior is some version of lockdown. Let's go to the survey result before Robin gets the last word this morning and see where the room and the mood in the room is. So 41% reversed the 2 million barrel per day production increase. 32% OPEC laggards should make up for oversupply, and 26%, a quarter, saying leave all as is. So the biggest support in the room is for reverse the 2 million. What's your view, Robin, and what's you think the rest of the week's travel?
Yeah, so I think look at the response on the poll was fairly balanced, although people tended to favour the 2 million cut. I personally went for just putting more pressure on the laggards and just trying to keep production where it is, keep the discipline. I think going back to deeper cuts is difficult, and the compliance wouldn't be complete then. Better just to hold the line where they are. And the price has not, the price has been a bit weak. It hasn't collapsed. It's only just dipped below 40 briefly. So I think they should just hold the line, and well, we'll see what the JMMC reports. I think it'll be, the report will be somewhat negative based on the current OPEC report, but I think that's more likely that they'll just say keep the current cuts, but just try to keep the compliance going, because the cuts are supposed to stretch out until, as I said earlier, April 2022. So it's a long road ahead, and they can't afford to be losing discipline now if they really still plan to have a.
Well, it certainly will be interesting. It will be interesting to see how they articulate around the laggards, because they've made it such a big issue that if they continue to facilitate it, I'm wondering how.
Yeah, sorry, Sean, you cut out for the last few seconds there. You were saying you couldn't articulate.
Oh, sorry, I was just. Yeah. I'm curious to see how they articulate the point around the laggards, because they've been, particularly Saudi, very vocal in demanding discipline and compliance. And if they don't get it and there's continued sort of looseness, how they react to that, how they explain that.
Yeah, that'll be tricky. I mean, look, Abdulaziz has been very tough with the non-compliers throughout his tenure, and I think he'll bring that to bear again. And there'll be also diplomatic pressure behind the scenes, perhaps economic pressure in some cases, to make sure that these countries do get on board. And I think the Iraqis, certainly at the government level, have said that yes, we are going to do our best to comply fully, even if there's some disquiet in from the oil technocrats in Iraq. And Iraq is really the key to this. The biggest producer that's been lagging. Russia, as I said, there's not too much they can do about that. They just have to accept a bit of undercompliance from Russia, I think.
Yeah, I think that's true. And also, one must know that it is the 60th birthday week, so it's probably not a good time to have an argument around the OPEC table. But nonetheless, the sentiment that they signal, I think, will be important for market direction going forward, given the sort of oversupplied market that we're in now, contango for as far as you can see into the new year. So they're going to have to signal, I think, something. If not action, they're going to have to signal strongly. Okay, thank you very much, Randall, for coming in from Florida. I hope my former boss's $100 million is well used in Florida. Michael Bloomberg apparently taking out the checkbook there. Kevin Wright from Singapore, thank you so much. Robin Mills in Dubai, thank you for your insights today. And for the 50 people logged in for the call, thank you all for your time. Have a good day and economically productive, and we'll catch you later in the week. All the best.